So finally, we have hit £20,000 in my Trading 212 portfolio. So I'm very, very happy about that. And today we're going to talk about my Trading 212 portfolio update because, as I always say, everyone loves them. So we're going to do them because views pay my bills. And you get on going with that. So this past month has actually been very quiet in the market. It's not been up and down like it has been for the last few months. And although that everyone is talking about a market crash, it hasn't happened just yet. Maybe that'll be a commentator's curse, and as I'm talking right now, the markets are crashing, but I don't know, we'll check in a minute when I open my phone. And although the markets have been very quiet, there's been a bit of news with Trading 212 recently. They've actually allowed new accounts again, so you can get your free shares and stuff like that, so there will be links in the description. If you want to get a free share from Trading 212, free trade, stake, CoinBase, wherever you want to go, there is a option down below. And on top of that, Trading 212 have changed their terms and conditions. I haven't looked into it properly just yet because I've been super busy, but there are a couple of videos that I'll leave links in the description if you want to go check them out. So let's get straight into it. We always start with the biggest losers, and this is a big loser, not one of my finest efforts, let's put it like that. So I'll just jump into the app so I can show you basically the biggest loser, and it's actually Supply Me Capital. I'm not quite sure if this is a winner or a loser because I have actually sold all of my position, but since I have done that, it has dropped around 30%. So that is not ideal for people that own Supply Me Capital, but luckily I did get out because I just thought I need to stick to my plan, stick to what I know, stick to what I'm good at, and just invest for the long term, blue chip, safe and secure. I sold my position for around a £15.80 loss, which is quite a lot considering I only put 40 or 45 quid in, so not ideal, 30% loss, but again, it's not the end of the world, it's only 15 quid. I did actually spend more than that last week down in the pub in order to throw it up again, which, yeah. Let's not talk too much about that because the people I was with were not very happy when I was sick on their carpet. But yeah, again, let's move on from that. And next to what we actually have in my portfolio, so if we scroll down here, we can get to Surface Oncology, which is another one of Cathy Wood's inspired choices with her Cathy Wood pie. However, with this company, I'm not too bothered because they are developing drugs for fighting cancer and helping people with cancer. So if this does flop, I'm still contributing to a good cause. Hopefully they do find something that relieves people of pain, stress, anxiety, anything that comes along with having cancer, because that is a good thing. So if they make someone's life 10% better who has cancer, then that is a win in my book. And because it's a relatively new company in this space, they could potentially come up with a drug that fights cancer or just helps someone in some way, and that goes absolutely bananas. Everyone buys it. That would bring in a lot of money, a lot of revenue, a lot of hype around that company. So the potential for this to grow is absolutely enormous. And if it doesn't quite work out, it won't be the end of the world because we've got the sort of moral aspect to fall back on. And then we have some other notable losers. So if we go down here, we've got CoinBase, which was a loser when I was writing the script for this video. However, it's up 11% now because that's what happens with crypto. It's very dependent on the crypto market. Now let's have a look at the other one, which was Spotify, which is down 9%. It's not the worst, not too bad. And my Spotify holding is not very big at all, so that 9% is really doing nothing to my portfolio. So I'm really quite happy with how it's all looking fairly green. So that's maybe why people are thinking there's gonna be a crash, because everyone's sort of up looking good at the moment. So that never lasts for as long as you want it to. So we'll just see what happens. We'll ride the wave if it does crash, and guess what? We'll just put more money in when it does crash because we can bring the cost average down and hopefully make a lot more money in the long run. So if there's a crash, it's actually an opportunity. So we'll just see what happens. But I'd love to know what's happening with your portfolios at the moment. Are you up? Are you down? Are you left? Are you right? Are you doing... Okay, I was going to swear there. Anyway, just let me know in the comments how you're doing, and we'll see from there. Anyway, let's get on to the notable winners of my portfolio at the moment, and back to the app. So we can see down here that we have a notable winner of Wells Fargo again. So last month they were in the lead again. They're up 55%, and that's with me selling a little bit off or rebalancing one of my pies. So I did sell a bit and then invested a bit more into other areas, and it's still up 55%. So looking fairly good. Looking fairly good indeed. I think the main reason that is sort of picking up again is because of the hopefulness with COVID. Everyone's being vaccinated, and across the world there are less cases, and everyone's feeling a lot more safer, and so mortgages can lend out more money, they can do more of their business. Wells Fargo's business model is heavily based off consumers in comparison to other banks in America, so they did get hit very, very hard when it was COVID, but they are looking a lot better now. And the next one we have is the old dividend stock that was Walt Disney, but now a massive growth stock, which is just crazy. So I'm very happy with Disney. They are killing it with their Disney Plus or Disney X, whatever it's called. They're making so much in-house content. They've got the new series Loki, they've got Mandalorian season 2 coming out, they've got Black Widow, all of the Marvel stuff, which just brings in so much money, and they're just going to continue milking Marvel for as much as they possibly can. So I'll take that, and that just continues to grow their Disney subscription service even more. Next up we've got Apple, which is up 36%. We love Apple in this place. We've got the Apple iPhone, we've got the Mac, we've got their trackpad, we've got their keyboard, all of that stuff there. Dr. Dre Beats over there. We love Apple. Their ecosystem of technology is just incredible, and it is no surprise that everyone seems to have a Mac or an iPhone. I personally think they're only going to continue to grow. They've got a lot of cash behind them, and for me personally, unless you can literally drive your car with an Android, then it makes no sense for me to move to Android at all. So the iPhone and the Mac just work perfectly together. It's allowing me to be a YouTuber so much more effortlessly because of just the way the things connect. AirDrop is like the most marvelous thing in the world, and yeah. And then next up we have a new one, which is a very small amount of shares, literally not even one share at the moment, but let's not talk about that. It's actually new to my portfolio, and it's called Deliveroo. I don't know if you might have heard of it. It's this sort of English company that sort of deliver food. You might see them like cycling around. Yeah, that company, yeah. So I haven't bought much at all because it's literally just gone into one of my pies, but I will be continuing to add to Deliveroo because one, I like the product, I like how the app works, I like the business model, just everything about the business is solid, and it's such a great idea that surprised it took so long for someone to actually think about it, but we're there now, it works perfectly, and I'm a big supporter of Deliveroo. And there's two big reasons why I want to continue investing in them. One is a UK stock, so it allows me to diversify from all of my American companies. Most of my money is in the S&P 500, so this allows me to just diversify a little bit. And I watched an interview with their CEO and founder the other day on Stephen Bartlett's Diary of a CEO, and he has some big ideas, and he wants to grow Deliveroo even bigger into something that's more than just a food delivery app. So they offer services a bit like Airbnb, so they offer like experiences, which would be a new string to their bow and allow them to continue growing into a different sort of niche and diversify again. So they can diversify, which allows me to diversify. You get what I mean. So just the growth for Deliveroo looks promising, and I'm just hoping that happens. And then we've got some other notable mentions. So we have Bank of Montreal, which is up 30%. We've got Coca-Cola up 10%. CoinBase 11. FTSE 100 12%. What else have we got? We've got Roku up 10. Shopify up 27. The S&P UK dividend up 12%, which is pretty good considering it's dividend like ETF. Square up 23. Starbucks up 14. Tesla up 18. Looking good all across there. And yeah, just overall my portfolio is looking very, very tasty, and that's what we like a little bit of juice, a little bit of green juice on the portfolio. And as always, what is propping up my portfolio as a whole is the Vanguard S&P 500 ETF VUSA, and it's up nearly $3,000 now. At 46.5%, which is pretty good. Almost half of my portfolio is in this, and I'm not complaining. 46% in just over a year is pretty bonkers. Obviously, I invested a majority of my money when it did crash. I just got the timing perfectly. So I'm not going to say I'm some genius, I'm not the next Warren Buffett, but if you want to call me up, Warren Buffett, offer me a job, then I'll take it. I'm joking, I love my job. I do actually love my job because it's not my old job, it's this job. I get to do this full time and I get to edit, so yeah, I do actually love my job. So Warren Buffett, I will decline you if you do message me, okay? We've got to shout out Legal General Group, which is up 5%, but they're also increasing their dividend. So that is very good news. So the next dividend will be a bit more than the last dividend. So that's what we like to see, a bit of compounding over the dividends and the dividend stocks. So it's good to have a mixture of dividends, growth, and ETFs just to mix it up and allow that diversification across all of the different types of stocks. And now we'll move on to the pies. So as you can see, the 2x2 ARK Invest pie is up 10%. Let's have a quick, so are we looking there? Tiny little dividend of 14p, so let's not even talk about that. Tesla up 7%. It's still a bit over the 20% of the asking price there, but yeah, Roku up 10%, Square up 23%. It's all looking very green apart from Surface Oncology, but we've spoken about that. And yeah, all looking good there, up 10%. Let's go. Yes, Kathy. And then we've got that Pie Felicia pie, which is a dividend pie. So we've got £1,100 in there and we're up 7%. So that's looking good. We're still investing, got a little bit of investing to do. There's 52 waiting to go in there when markets open in America at 2:30. So we've got in here, we've got FTSE All World High Dividend Yield. A couple of these I talked in this video here, which I'll try and put here or here. So if you want to see that, then go for it. And then we've got Coca-Cola, which is a great dividend, and we've got AT&T, Verizon, AbbVie, which is also in another dividend video, which I'll put here. Unilever, IBM Corporation, Bank of Montreal up massively, Wells Fargo up massively, Legal General up massively. But again, it's not a huge amount of money in there, so can't be laughing to the bank just yet. And then we come out of there and we go into slow and steady wins the race. So we're ahead on that at 18,500, 28% up, £113 in dividend in just 13 months maybe. So well, maybe not that much because the pie started a bit later. Anyway, ignore me. We're just looking very, very green in here. Walt Disney up 47%, Vanguard 46%, Apple 41%, Tesla 20%. All of these looking fairly good. Wells Fargo 56%. That's what we like to see. We are growing, we are growing, we are growing. This time last year had 11,000 in there and we are now at 20,000. So just over double in a year. If we can double every single year, that would be absolutely bananas. And yeah, geez, yeah, that would be pretty good. But let's hope I can continue investing lots more, and we'll just see where it goes. Again, yeah, overall I'm up 26%, which I'm very, very happy with. And that's about it really. I hope that's been helpful. If it has, just let me know in the comments and click that like button because that really does help out the channel. Make sure to get your free shares in the description and watch this video that I will put up here. And I'm not a millionaire, but I'm trying to help you become one. So, peace!